Welcome back to Fast Money. A roller coaster ride for Gamestop shares today, with the stock closing up 22% after falling more than 8% in early trade. Shares still down 35% in the last 3 days, though, after Roaring Kitty's live stream on Friday. But what is going on with his options bet? Baycrest Managing Director David Boole joins us now to break down the action. David, what do you think?
Well, it's always interesting in GameStop stock and GameStop options. Like you said, the stock was up 20% today. This follows on the heels of multiple 40+% moves last week. And so when I'm looking at GameStop options, the June options are pricing in about a 20% move every day. So these are actually normal moves based on the way the options are priced. Now, of course, there is heavy open interest in the YOLO type calls, the very far out of the money calls. Those are incredibly expensive, even more expensive this time around than in January of 2021. But this up 20%, down 20% moves we're seeing are about normal based on the way the options are priced there right now.
Hey, David. So last night, Keith Gill, disclosed his positions. 120,000 of the June next Friday expiration 20 strike calls, paid about $5.85 for that. So the stock is 30 and change. So they're basically trading like stock. You advise a lot of institutional clients with positions like this. What would you suggest he should do 8 trading days out? Because again, like you said, there's a lot of volatility. There's a whole host of things that could kind of have this stock go back towards that $20 strike.
So as you mentioned, he controls apparently 120,000 of these calls, which are equivalent to 12 million shares of notional. Add that on to another 5 million shares. That's 17 million shares. That's essentially trading like stock that he controls 17 million shares of right now. And so contrary to some of the takes that I've seen on Twitter, the market makers on the other side of these call positions, they're already long some 10 million, 11 million share equivalents. So there's not going to be some phantom stock that needs to be created if he does go ahead and exercise those calls from how I see it. Where I do see some institutional investors finding some opportunity is on the modest upside. Those very far up 50%, up 100% out of the money calls are priced so expensively that the up 20%, which is a modest move for GameStop, range of that part of that distribution is priced very attractively. And I'm seeing some investors take some bets there.
Wow. David, thank you. David Boole, Baycrest. I'm surprised every day that this stock goes up by this much and continues to do so.
The story doesn't go away. I mean, if I'm Games, first of all, they did what did they do, Karen? A 75. I want to say
up to 70. Yeah, they had already done some,
and we
haven't seen any.
45 million a few weeks ago,
right? And then they have another 30.
Which good for them. But how do you think they feel? Their stock is now just a carnage. It's a sideshow. It's got nothing to do with their business. I mean, that would be, for me at least, a little bit disappointing that your company is no longer a company. It's just basically a point of speculation for a lot of people out there.
If it gives you another lifeline or two, I don't care.
And if you own the stock and it goes higher, you don't care either.